Today, we're going to be talking about a non-owner occupied or an investment property home equity line of credit. Now, if you don't have an investment property yet, that's okay. You're still going to want to stay tuned because this same bank or credit union, I'll share who a little further in the video, is now offering a terrific tool or a terrific primary residence home equity line of credit as well. So we're going to go through all the terms, and then I promise I'm going to tell you exactly who it is. This is not a sponsored video. I'm doing this purely because I love you guys. This is something that you're always coming to me asking about, and this one serves all 50 states. So no matter where you live, if you have equity in your properties, this may end up being a tool that can help you out. If you're new to the channel, we teach about how to hack the banks, how to turn the banks against each other. And we use tools like home equity lines of credit, but in many other shapes and sizes as well, in order to grow our cash flow position. Cash flow is the difference of what you're earning and what you're spending each month. And the more cash flow you have, the more choices you can end up having in life. So cash flow is the most important number. And we count on these debt weapon tools to help us grow our cash flow. And we do that in three different ways. The first is by virtue of the name, we attack and eliminate debts with them. And if you go to the description below, you'll see a lot of videos where I show people how they can pay their houses off in 5, 6, 7, 8 years. They can pay extraordinary amounts of non-mortgage related debts off in a small fraction of the time. I personally paid off $600,000 of non-mortgage related debt in about 18 months. Using these same tools. It's a phenomenal approach to how you're banking and how you're borrowing. The second reason that we use these debt weapon tools is to make really good investments. We grow our income streams. We diversify our asset collections. And so we're building businesses, we're buying real estate. I've even used these tools to invest in cryptocurrencies, which I'm sure glad I've done. Guys, let me tell you a real quick story. I met a guy through YouTube, came to me for a free coaching session when we were doing them over the summer. So we had a session in July. This guy had been an early investor into Bitcoin. He put $100,000 in. And when I spoke with him in July, I think Bitcoin was at $9,200. He was worth $6 million already. Guess what? It's now January. Bitcoin has gone over 40,000, which means that his new net worth, if he kept them all since our conversation, would be over $25 million. Guys, the potential is outrageous out there right now in so many different areas. And these debt weapon vehicles allow us to leverage other people's money and leapfrog ourselves way ahead into the future compared to what we would do if we were just trying to save our money. Now, speaking of savings, the third reason that we use these debt weapon vehicles is to avoid having to save money. We use them for emergencies. Saving money is garbage. If you're saving money, the bank is beating you. They pay you little to nothing to keep your money and to reinvest it. This approach to investing your money, fractional reserve lending, gives them permission to lend up to 9 times what you put into your checking and savings accounts. So why would I keep the old-fashioned archaic approach of saving 3, 6, 12 months worth of reserves for that supposed rainy day that may never show up when I could just rely on one of these tools and put my money to work elsewhere in the meantime? That makes so much more sense. So that's why we use these debt weapons. And historically, home equity lines of credit, or HELOCs as they're often called, have been, if not my favorite, top 2. It has been virtually impossible to find investment property home equity lines of credit since the pandemic. They're very difficult to find, but I've got one for you. We're gonna go through the terms, okay? Now, if you're wanting to borrow on an investment property, this specific lender will go up to 80% combined loan to value, CLTV. Now, how do you calculate how much that is for you? Take the conservatively realistic estimated value of your house. Let's say for purposes of this example, that's $200,000. Multiply that number by 0.8 to calculate 80%. You'll come up with $160,000 as 80% of 200. Now subtract the existing balance on your first mortgage. Let's, for this example, use a $100,000 amount. That leaves a $60,000 equity position that you could potentially tap into if you applied for and were qualified to get this specific product. Now, under non-owner occupied or investment property terms, where it's a house that you're not living in, they would charge you a 4 7/8 interest rate for that. I remember back in the day, we would have done backflips for an interest rate that good. And you'd only pay interest on the amount of money that you're using. You don't actually have to ever borrow this money unless you find an intended purpose for it. Again, is there a way that you can manipulate how you pay your debts off? Is there a way that you can make an investment that would produce a great return? Or if you have an emergency, at that point, you can draw against this and it's same as cash. Now, there are certain downsides to home equity lines of credit. I don't want to pretend like there aren't. In fact, I'm going to leave a link to a video in the description below of why I also hate home equity lines of credit and why you have to be very careful with them because they do come with various risks. But otherwise, it is an incredible tool. Again, it operates very similar to your checking and savings. You can put money in, you can take money out. It's free flowing, totally liquid. If you have a primary residence that has equity and you don't yet have an investment property that does, then you can also borrow a home equity line of credit on your primary residence and they'll go all the way to 90%. Now at 90%, they'll charge you 4.75% interest rate. And if you keep it under 80% loan to value, like you would have to for your investment property, they'll give you a 1% interest rate price break. So they'll actually reduce that down to 3.75%. Let's talk about costs, because sometimes people think, well, what am I gonna have to pay to actually get access to this? Would you believe it if I told you that this specific lender, who I'm gonna tell you who it is, hang tight, okay, drop a like on this video, earn it, please, earn that bank from me by just dropping a thumbs up. It tells the YouTube algorithm that, hey, this channel is actually worth watching and we're giving away great value and we're not charging you for it. So, hey, please share this great channel with other people. That's what it tells YouTube, and we really appreciate you doing that for us. Also, it helps my rib heal up faster too, guys. So likes, please drop likes, please drop them. All right, now I'm sounding pathetic. All right, so what are the costs on this? Guys, this is gonna be free. This is gonna be free for me. Now, why do I say for me? Because apparently when I talked to the actual banker yesterday, he said that in certain counties, there's things like transfer taxes or third-party fees that can come up that might even cost as much as $1,000 that they're not going to pay for you. But they have other closing costs that apparently they pay on my behalf. They said it's $365.67 worth of closing costs that they're going to cover for me, which sounds ridiculous. It's like, well, is it really a closing cost if you're going to charge it and then delete it? I mean, it seems sort of strange. Speaking of strange, if you have 3 investment properties, if you have more than 3, so 4, 5, 6 investment properties, and you want to get a non-owner occupied or an investment property home equity line of credit through the specific lender, well, too bad, so sad. They're not going to give you one, even if those properties are free and clear. So up to 3 investment properties maximum that they'd be willing to lend you a non-owner occupied home equity line of credit for. Otherwise, you can still get a home equity line of credit on your first primary home, even if you own 10 houses, okay? They just won't lend you the non-owner occupied version. Now, I supplied an application for them yesterday on my primary first, and that's gonna be a 90% combined loan to value for me when I originally intended that it would be only 80% or less, because the desk review on the appraisal, which he did right there on the phone with me, came back much lower than I expected. I figure if I put this property on the market tomorrow for $725 grand, just based on how hot it is around here, I'd get competing offers and probably get over ask price. But when he did a desk review, which was also free, they came back at $657,000, which means I'm gonna have to bump this to 90% to get I wanted 125 grand originally. I'm now gonna get 136,300 if we make it to the closing table. I don't expect to get to the closing table without bumps and bruises, hiccups, challenges, and even possibly my firstborn, which is how the banks usually work it. In preparation for that, they did say that I'll probably have to supply up to 2 years tax return, so expect that. I'll have to give them my declaration page for my insurance. That's standard, that's an easy. And number 3, I'll have to supply the closing disclosure from my recent refinance on the first mortgage of this house. So all very, very easy to supply. I'm crossing my fingers that this goes smoothly, but oftentimes it won't. And I'll keep you posted on that. All right, without further ado, who is this amazing lender that's giving access to the unicorn of debt weapons right now? PenFed Credit Union. That's right. PenFed Credit Union, folks. You can visit their website at penfed.org. This is not a sponsored video. I am just a customer. So far, I'm very happy. I love the back-end portal. I love the fact that this is going to be free for me. They didn't say it's free for everybody. They said it depends on which county you live in. They could have costs, transfer fees, and so forth, especially on the East Coast, that could end up costing you as much as $1,000. But as long as the desk review comes back, the appraisal is free. My desk review came back no problem. And so far, everything is looking great. So keep your credit scores high. Check out for our next video on debt to income ratios, which are going to matter according to your ability to get access to these tools. If you have more than 3 rental properties, they will not lend you on an investment property home equity line of credit, even if they're free and clear. Isn't that bizarre, guys? Don't you think it's bizarre that if you've done a great job at building wealth, accumulating assets, and even paying those assets off, that a bank suddenly considers you more risky? I'll never understand them. Anyhow, If you have less than 3 rental properties, you can get home equity lines on each one. And even if you have more than 3, you can at least get a home equity line of credit on your primary residence. So those are all the terms I know about so far. I'll fill you in as things progress as far as my application is concerned. And until I see you on the next video, my friends, you guys keep making it a great day. Stay healthy out there and keep on cash flowing. Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use, and it's quick to navigate. So let's go ahead and walk through that process together. Go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy, and go ahead and select the red button. Immediately, it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.